Hey, Dan Passarelli here. Charles Dickens started out one of his books saying it was the best of times, it was the worst of times. Well, that kind of reminds me of AI and chip stocks right now. So, ASML, let's take a look at that chart. ASML earlier today, I'm recording this a couple hours before the market closed, was down 16, almost 17%. Holy cow, what happened there? Well, they made a little bit of an oopsie and accidentally put their earnings results on their website a day early. What do you know about that? And then they took it down, but then just, realized the cat was out of the bag and put it up there by midday. And so, yeah, so that stock is down quite a bit. Now, interestingly, and this is pretty conducive with a lot of things that I talk about when I talk about earnings, their expected earnings were $5.24. They actually beat that by 52 cents, by like literally 10% above expectations. Yet the stock is still down quite a bit. Now, what's the reason for that? Well, one of the reasons is because analysts tend to estimate below actual announcements most of the time. And so stocks are kind of almost required to beat just to break even. And sometimes if they beat but not by enough, they get driven lower. But there's also something that happened. The Biden administration said that they're considering putting caps on chip exports to some countries. Now, that can be a pretty big deal, especially in the wake of the executive order on chips that came out about a year ago. AI technology is very, very powerful. And when that ends up in the wrong hands, or at least I think that that's the way the government's seeing it right now, that could be a problem. And so that can definitely put some supply pressure, if you will, on chips that are created, and that can weigh on how much businesses are able to grow, which is just another way of saying that could put a ceiling on the stock price for a lot of these chip stocks. Now, is this the time to go and sell out of all of your chip stocks? Well, that's the other part of this, right? AI is still a very, very powerful thing. There was the big craze that happened earlier this year where like NVIDIA just rallied like to the moon. NVIDIA is down today just about 4.4% at the time I'm shooting this video. But AI is going to continue to be developed, and those chips are going to be continued to being needed. And companies like ASML that supply the things that companies need to make those chips are going to be needed as well. So this is going to be an interesting sector going forward. And I've already pointed out in some of these daily videos some volatility plays on those. We're going to keep watching for some of those. And that chip sector is still going to be providing trading opportunities for the foreseeable future, especially throughout the rest of this earnings season. And for those of you who don't trade earnings yet, please make sure to attend my online training that I'm having this week, all on trading earnings. You can register for that for free by just going to markettaker.com/REG. That's markettaker.com/REG. This is Dan Passarelli. Trade smart.